Let's also connect then with Pankaj Pandey, who's now joining in on the show. Pankaj, hi there. Good to have you on board. We had some interesting data that we were culling out, talking about the kind of promoter stake sales that we've witnessed in the last month or so. 43,000 crore rupees. How are you reading into all of this? The likes of these MNCs selling, the likes of ITC, Indigo, TCS, etc., as well in the list?
Hi, good morning. Thanks for having me. I think so. From a FPI perspective, if we look at yes, we have seen inflows of about 40,000 odd crores. But our sense is that most of these stocks are sort of specific cases. So, for example, Indigo, one promoter has been sort of continuously paring down their stake. Whereas if you look at the case of ITC, nothing changes structurally because BAT is sitting on a high amount of debt. So a stake sale does not really sort of change the overall texture of the company's growth. And I think TCS largely is coming from the perspective that while it will have some impact on Tata Chemicals because that is one stock which was going up largely because of the stake they have been holding in Tata Sons. But it looks like that overall with this promoter stake sale, the free float for TCS could go up. But I think for Tata Sons, I think a lot of stocks which were riding on that value will sort of take a backseat, especially Tata Chemicals. So I think most of them are stock-specific cases. I don't think you see a definitive pattern in terms of selling being done or in terms of valuation being very high. So it's not really an indicator of any kind of a negative trend emerging from this.
Pankaj, we are looking at 40,000 crore getting sucked out. Now, if a BAT stake sale would have not happened, if a TCS stake sale would have not happened, if Indigo promoters would have not sold out, this 40,000 crore technically would have gone into different set of stocks. It could have had a different price impact because that is money which, this way or that way would have come back into Indian markets. My point is that 40,000 crore getting knocked out suddenly, could that lead to a liquidity vacuum in the near term?
So Nikunj, good morning. Thanks for having me. So I think you look at from the perspective that you have got SIP inflows of nearly 19,000 odd crores on a monthly basis. On top of it, you get about 3 to 4,000 odd crores of inflows from the ETF perspective. And overall, the domestic liquidity is still quite good. So which is where I think even if there is a bit of a selling there, I don't see that is going to sort of change the market trajectory overall. And I think FPI inflows come and go, and which is what we have seen last year also. And we have also seen that while the inflows are good, the retail investors sort of tend to book profits at times also, especially during the marriage season. So, but we haven't seen any kind of a major pressure on the market. I think the domestic liquidity is still quite strong, and I think it is here to stay for some period of time. So from that perspective, we are really not that much worried.
We were actually just having an interesting chat about Zomato in the studios right now and wanted to get in your take. The fact that Dipinder Goyal going on record yesterday at the Startup Mahakumbh to say that Blinkit in a year's time is going to be bigger than Zomato. Big plans in store.
So new age companies is something which we have not been tracking for quite some time, including Zomato. So I think somewhere down the line, we are still sort of waiting for some more period of time where companies gives numbers on more on a steady basis. Then the business also sort of keeps on changing. So I think we are still not really chasing that space. I'm sorry, I won't be able to comment on this talk.
You've avoided tracking all the new tech companies. I mean, was that a firm conscious call because action to wahin par hai?
So Nikunj, I think so. We've been sort of more traditional in the way that so whenever stock trades at 8 to 10 times sales, somewhere down the line we still don't that get comfort. I think the one space which was trading at 8 to 10 times sales was something like CRAMS players or the likes of DVs and other players. Now there the margin profile is quite good in terms of 40% kind of a EBITDA margin. So and we have seen a decent history of performance of some of these stocks. Otherwise, I think if you are closer to the 8 to 10 times sales, I'm still sort of skeptical in terms of the business model and how things will evolve. Well, yes, some section of the people are liking those stocks, but we are still sort of yet to sort of form our views on some of these names, even though the opportunity looks good.
Well, let's hear out Dipinder Goyal on not Zomato's food business, but on Zomato's quick commerce, which is the Blinkit business.
I mean, for us, it's all about how do we disrupt our own businesses. For example, right now we have a business plan competition going inside the company, which is going to offer funds to a small team, which will disrupt the businesses that we are in. Right, so I mean that could lead to Zomato version 5 or Blinkit version 2, and Blinkit is also part of Zomato version 4, right? So, and in 1 year's time, Blinkit could be bigger than Zomato. So I don't know how long Zomato will have its own relevance. I think even हो जाएगा से पहले पे आते हैं, right? So I think I see a lot of founders starting a lot of companies, and I ask them, why did you start this company? And the question is, I want to make a lot of money. I don't think that works, because that leads to the governance calls and bad governance calls and the shit that happens after, right? So I mean, that's not the purpose with which you should start a company. You should be so passionate about something. You should be willing to risk your life for it. Only then you are able to build the company of your dreams. Money is such a thing. It's like for boys, it's like girls. If you actually chase it, it never happens to you. It never comes to you, right? So, I mean, money is the same thing. So I think that's the only piece of advice I would have. Do it with passion. Don't do it for the money.
Easier said than done, right? Pankaj, every promoter tells us the same thing. Do it for passion, don't do it for money. But when I look at the ESOPs, when I look at what they have in terms of the promoter holding, market cap, it matters, right? बहुत easy है बोलना, do it for passion, money will follow.
Absolutely, and I think the challenge always is that when the business model sort of keeps evolving, and I mean, so that is where the challenge lies. That you need to sort of see the business model perform over the next few years to get a sense of the opportunity which is going to sort of unfold. So, which is where, I mean, it's very difficult to sort of take a call, which is business, which is sort of continuously sort of evolving. I think Naukri was the last new age business which we had liked, and subsequent to that, we have seen a lot of business coming in. Not to say that this is the businesses are not going to do well, but I think for us it is going to take a lot more time to sort of understand. I think, like I highlighted in case of CRAMS, it's a sort of a very longish kind of opportunity. But what you see in terms of deal sizes, that companies or the customer stickiness is quite high for a period of 8 to 10 years. So you really do not change your partner in a very shorter time frame. So, which is why you can still take a longer call of business being there for 10 years and beyond. And which is why the valuations are high somewhere. But a lot of business need to sort of get it right for most of the parameters to sort of make money for the investors.
You know, just wanted to get in Kunal's take as well on Zomato, given that we were just discussing this stock. And it's interesting, Kunal, that you've culled out some data as to how it's performed versus some of the other new age tech stocks, right?
Well, yes, absolutely. In fact, it's the only new age tech stocks which are listed in 2021. With comparison with the likes of Paytm, Nykaa, etc., etc. Many of the stocks, even Policy Bazaar, PP Fintech, Zomato is the only stock which has managed to make a new high for itself, crossing about the 2021 highs. So I think 169 was the high that time around for the stock, and the recent high for Zomato was around 175, as compared to even the likes of say Policy Bazaar, where the stock made a high of 1450 plus, and the recent high was just around the 1180, 1190 mark for the stock. So that itself tells you that the stock has not just gone through it didn't went through just a routine correction 2021-22, but it's also managed to make a very strong comeback to make a new high. That itself is a sign of strength for the stock.
Okay, fair enough. That's the view coming in on Zomato. Meantime, given the fact that there are a number of brokerage notes as well coming out on HDFC Bank saying that there's not going to be any material impact on the business due to the change in the senior management, the stock as well has been started to perform. Pankaj, what's your stance on the performance of HDFC Bank, what investors should do, and do you have any other preferences within private banks?
So for HDFC Bank, we have lowered our target price to 1800. Our sense is that the margin recovery is going to take time, and the kind of historical outperformance this stock has delivered is unlikely sort of happen, even though the valuations are looking attractive. I think what we are sort of liking is more of PSU names like, say, for example, SBI. I think SBI overall, our sense is that can deliver 14-15% kind of a growth. And historically, we've seen when the economy does well, and if there is a further growth than these numbers in PSU banks, I think the re-rating opportunity there is a lot more higher. And on top of it, our sense is that in the second half, whenever we see interest rate decline happening, I think some of these PSU banks would witness an improvement in profitability largely because of the treasury gains. So I think PSUs still look attractive to us within the entire BFSI.
All right, Pankaj, thanks so much for taking time out.
If you like this video, then like, share and subscribe to ET Now.